Is Florida ready for a housing market rebound? That is exactly what we are going to cover today. If you're new to the channel, welcome aboard. My name is Chris Igo. If you're a returning viewer, I appreciate your participation in our journey. And today we're going to get right in. But before we do, I think it's critical to understand the headline news which is happening right now today in order to understand what is likely to happen in the future. And although the Florida housing market might be ready for a rebound, in certain markets, this macro trend is no bueno long-term for the overall housing market because the U.S. is subsidizing high-risk home buyers at the cost of those with good credit. And if you remember the last housing crash, you probably also remember that it was started by risky loans, by loans that were made to non-credit-worthy borrowers. Folks with no business ever getting a loan for the amounts that they were asking for were not only able to buy one home, they were able to buy multiple homes. And that house of cards collapsed. And thankfully, we haven't seen anything like that as of yet. If you've been watching for a while, you know that I've talked about the fact that there will very likely be new programs, new loans, new ways to stimulate the market. New ways will be created to allow buyers to buy homes. And while I'm not a fortune teller or an economist or many other things, I do have common sense. And having been a stockbroker for damn near 20 years, I know, based on what I've seen before, that many of the things that are happening right now are totally predictable. And I'm not a market timer. I will never know the absolute bottom or the absolute top of any market. And anybody who tells you that they do know the definitive top and bottom, I can tell you they're lying to you. But the numbers don't lie. And right now in today's market, a little noticed revamp of federal rules on mortgage fees will offer discounted rates for home buyers with riskier credit backgrounds and force higher credit home buyers to foot the bill. Both Fannie Mae and Freddie Mac have enacted changes to fees known as loan level price adjustments, which go into effect on May 1st. And they will affect mortgages originating at private banks nationwide from Wells Fargo to JP Morgan Chase, which will effectively tweak interest rates paid by the vast majority of home buyers. And the result will be pricier monthly mortgage payments for most home buyers. And let me say that a little bit differently. You've worked incredibly hard to maintain and grow your credit score. And the reason that you've worked so hard to maintain perfect or damn near perfect credit is to capitalize on the discount that you'll receive because you're a good creditor. You have proven that you are not a risky borrower. And with mortgage interest rates on the uptick, the last thing that anybody wants is to pay more for their mortgage interest rate or pay more fees. But under the new rules, high credit borrowers with scores that range from 680 to above 780 will see a spike in their mortgage costs, with applicants paying 15 to 20% down payment experiencing the biggest increase in fees. Which is a long way of getting to good creditors are being punished, and the highest risk borrowers are getting a significant discount in their fees. Meanwhile, buyers with credit scores of 690 or lower will have their fees slashed, resulting in more favorable mortgage interest rates. A buyer with the 620 FICO score and a down payment of 5% or less gets a 1.75% fee discount, a major decrease from the old fee of 3.5% for that bracket, which is a total crock of shit. And while Fannie Mae and Freddie Mac are calling this a big win to level the playing field, I call it a setup. And I know how that story ends, which takes us to the deep dive analysis of the Panama City Metro. And to be abundantly clear, this data is lagging. This is February 2023 single-family homes data for the Panama City Metro. It happens to be the most recently published data that exists from the Florida Realtor Association. And the good news is that the March data will be published on the 20th. But even that is a month old, which is why it is critical to work with a professional that understands the hyperlocal market that you are buying or selling in order to advocate and negotiate for you the right way. And if you'd like to be connected with a hyper-local professional that can advocate and negotiate for you the right way, then please reach out and we will connect you directly. But let's get right into it. Panama City Metro. We're talking about Bay County and Gulf County. And as you can see on the map, we're talking about the Panhandle region. And the Panama City Metro will trade completely differently than any other market within Florida. And it certainly trades very differently than my market in Palm Beach County. But many of these trends are similar to what we've seen in every market that I've covered. Closed sales took a big hit, falling off a cliff, down 22.6%. Cash sales down 30%. Median sales price up 6.1% from 330 up to 350,000 as of February. And the average sales price is on the uptick a touch under 1% to 447,000 and change, up from a touch over 443. Single digit appreciation, which is what I expect to see within most markets throughout the state of Florida for the next year. But dollar volume's down 22%, which of course is a function of closed sales being down so much. And the median percent of original list price received is down almost 6%, down from 100 to 94.2. Median time to contract and median time to sale are both on the uptick, with median time to contract up 281% to 61 days and median time to sale up 46% to 101 days. And while both of those figures are massive jumps in terms of time, they are a return to normal. Because February of 2022 was not a normal market. 16 days to go under contract and 69 days to sell are over. New pending sales down 22.2% and new listings are down 23.6%. Pending inventory is down 33.4%. And the inventory of active listings, the homes that are sitting on the market unsold, is up damn near 110%. There are 1,177 single-family homes sitting on the market unsold in the Panama City Metro, which is great news if you're thinking about buying because you've got more leverage and you've got more choices, and no bueno if you're thinking about selling. And predictably, the month supply of inventory has upticked too, up 150%. February of last year, there was 1.2 months of supply of inventory. And as of February 2023, there is 3 months of inventory. And I suspect March numbers are going to be much more favorable if you're thinking about buying. Yet to be determined, I don't know, but we will know on the 20th. And you can bet your sweet Bippy that I will keep you posted. Which takes us to the story of median sales price. And a look back over the last 12 months will be very instructive. And as you can see, that year to date, the Panama City Metro is up 9.5%. And February was up 6.1%. And February was tied with November and December as the slowest appreciating months on record. But it will be very interesting to see what March reveals. But gone are the days of 27.1, 23.2, 24, 23.7, 26.2, 25.5, and damn near 16% median sales price appreciation. Single digit growth is what I suspect you're going to see for quite some time. And if you look at the bar graph on the bottom, what you can see is that back in January of 2019, the median sales price for a single family home in the Panama City Metro was right around $200,000. And if you look to the right, what you can see is that in February, the median sales price was $350,000. And year to date, it's $361,000 and change, which is a long way of getting to homeowners in this metro are sitting on a metric shit ton of equity. But given the fact that new listings are down so much, I doubt many of these sellers are very interested in trading up into a 7% mortgage or higher, which will very likely further constrain supply. And average sales price tells a similar story. If we look back over the last year, what you'll notice is that in February of this year, it was the slowest appreciating month. But year to date, the average sales price in the Panama City Metro is up 5.2%. But gone are the days of 25.6, 17.1, 18.6, 34.5, 24.8, 21.2, and 21.4% average sales price appreciation. Those days are over. And if we look at the bar graph on the bottom, what you'll notice is that in January of 2019, the average sales price was hovering right around $225,000. And February was $447,000. Year to date, it's $452,000, which is a long way of getting to the average sales price in the Panama City Metro has doubled since 2019, which I'm sure doesn't come as a newsflash to anybody. Homeowners in the Panama City Metro and in most markets within the state of Florida are sitting on a metric shit ton of equity, and they are reluctant to sell because nobody wants to trade into a 7% mortgage when they're locked in under 4%. And year to date, new listings in the Panama City Metro are down 19.4%. In February, they were down 23.6%. And since October of last year, there has been a shortage of new listings hitting the market. And if you look at the bar graph on the bottom, you can see that new listings in 2019 were a touch over 400. And 2019 was a normal market. As of February of 2023, there were less new listings than 2019. And a shortage of new supply of listings will absolutely impact the home values in this metro because supply and demand always dictate price. Which takes us to the distressed sale market that exists within the Panama City Metro, which of course is comprised of Bay County and Gulf County. And similar to every market that I've covered so far, in February of 2023, distressed sales were a non-event. There were 2 foreclosures within the Panama City Metro, which is down 33.3% compared to last year. And there was zero zilch nada in terms of short sales. And while I know that the pain of recession will absolutely cause distressed sales in the future, they will take time. But given the fact that consumers with low credit scores are being incentivized with reduced fees to take on new mortgages, you can bet your sweet bippy that the distressed sales market at some point will be on the uptick. Now, I hope you found this content valuable, and if you did, please subscribe to the channel. Give it a thumbs up, share it with a friend. If you're thinking about buying or selling, please reach out directly because we would love to help. And check out my next video because I suspect you will love it a lot. And until next time, peace.